And as we turn the calendar from 2024 to 2025, plenty of insight about the economy, about people's pocketbooks. So many Americans, so many millions of Americans keeping an eye on that as we move from the Biden administration to the Trump administration. Obviously, a lot to get into. And this was the look today after the Fed Reserve projected fewer rate cuts next year. It dipped off, dipping some 1,000 points down, the Dow plummeting as the Fed rate outlook forecasts just 2 interest rate cuts in 2025. Jerome Powell announcing that today, not the previously projected 4, as it did eventually get down there less than 1,000 points, dipping into the red today. All right, let's dive into this and much, much more here with wealth management expert, friend of the program, David Ragland. David, thank you so much for joining us here on Live Now from Fox. And of course, we heard some news there from Jerome Powell, and you know the market reacts when he says something. Any word he says, what do we make of this? And when you see the stock market tumble at all, does it concern you?
Well, I don't think Jerome Powell is going to be the Grinch who steals Christmas from us. You know, obviously the markets are still up substantially. Yeah. You've got the S&P up over 20%. You've got the Nasdaq up over 30%. But what he is telling us is that the rate reduction cycle has definitely started to slow. Whereas we had interest rates go up and maintain themselves, and it was higher for longer. Now we've come all the way down, and the market was, as you said, expecting 4 rate cuts next year. Markets were up substantially, especially the high-tech stocks. Bitcoin, the speculative trade, I think took a little bit of an unwinding today because of, the prospects of a lot more rate cuts have been taken off the table, really because you got sticky inflation. I think that's the best way to describe it at this point.
Yeah, of course, the Grinch who stole Christmas. Hopefully their heart grows 3 sizes in 2025 to get that back as well. In terms of the inflation, and you mentioned it being sticky, what needs to change in 2025 and how closely will you be monitoring that number? Is that the main number we're focusing on?
I think inflation, I think the Fed today really signaled he's really got 2 issues that he's got to really work with. He's got sticky inflation. He pushed out by a full year his 2% target rate. Was in 2025. He wanted inflation at 2%. Now he's pushed it out to 2026. But he's also have to be concerned about the unemployment rate. Now, unemployment is still low by historical standards, but it is still starting to move up. If you have a job, you certainly want to keep it. If you don't have a job, you're certainly finding it very difficult to find one. So the sticky inflation, though, is really being a product of a still growing economy. The good news for 2025, if you want some good news from today, is growth is still there. We still have a positive economy for 2025.
Yeah, people are so very optimistic this time of year as we head into a new calendar year from 2024 to 2025. And I want to ask you, as we enter a new year, there's just so much about it. Any tips for people in terms of tax, in terms of wealth management, that you want to kind of give people this time of year?
Well, certainly this is the year, this is the time of year that you want to focus on 2024's tax returns. So you want to max out your 401k. You want to make sure that you max out your contributions. You want to do tax loss harvesting. If you've sold your business this year, set up a donor advisory fund if you still have time so that you can put money into a fund, you get a charitable contribution, and you can make the donations allocated next year or thereafter. If you are 70 and a half or older and you want to give money from your IRA account, give it directly from the IRA instead of you. There's tax benefits for doing that. And if you're one of the lucky ones that have assets above the estate tax limit, every year give away that $18,000 per person. A couple can give away $36,000. May not help your tax return this year, but certainly going to help you down the road. So there's 5 issues or ideas that you can come up with to save your taxes this year.
Yeah, and it is the season of giving, so that's what you talk about, those gifts in terms of that number. Has that number changed in recent years, and will it change again in 2025?
The contribution limit for the $100,000 out of your IRA has been set at 100. That typically doesn't index quite frequently. The 401k IRA contributions, those numbers are already out for 2025, and they are going up. The good news is if you are 60, between 60 and 64, next year you're going to get a big benefit. They're going to give you an extra catch up. So the amount that you can put in a 401k, 403b, if you're in that specific age range, has gone up substantially. So the first thing you do on January 1st, reach out to your advisor or reach out to your 401k company and say, hey, I want to adjust what I can put into my 401k to limit the amount of taxes that you pay for 25. And if the market comes down in 2025, which we have a correction almost every year of 10%, you'll be there to take advantage of that whole buy low and hold on for the long term.
Yeah, that is good advice heading into the new year. And I do want to ask you as well, talking about some of those different funds, and people also like to give money to charity this time of year. Is there any benefit to that? And what advice do you have in that regard?
Certainly, charitable giving is top conversation this time of year. So when we look at charitable contributions, we love the idea of what's referred to as bunching. That's making a lot of contributions in year one and not making them in year two and making them again in year three. They substantially changed the tax law several years ago to dramatically increase the standard deduction and to limit tax deductibility of real estate taxes and income taxes. So charitable contributions aren't necessarily as beneficial as they used to be because the standard deduction is so high. But if you take 2 years worth of contributions and put them into 1 year, hopefully you're going to get more bang for your buck. So if you're going to make contributions regularly in 25, maybe prepay them in 24 to really jack up your itemized deductions for 2024. That way you're going to get a bigger bang for those charitable contributions.
Yeah, that is so very good. And it's so very good to do, as so many people they're in need this time of year as well during the very holiday seasons. I do want to ask you about 2024, 2025, because so many people make resolutions in terms of wealth, in terms of money. What resolutions do you hope people make?
I just hope that they will make a resolution to actually look at their money on a regular basis, once a month, once a quarter, once every 6 months. And it's more than just looking at your investment statement. The most powerful thing that you have is financial education and financial feedback. Just take a look at, here's what came in during a period and here's what came out. If you're making progress every month, that more money is coming in than is going out, over the time, you're going to have more money and you're going to become more wealthy, I think is a great thing to do. Back to our conversation about charitable contributions. One thing that I didn't mention is the ability to give appreciated stock. We've got the market up dramatically this year. So if you'd bought Tesla, and let's say you bought it for $10,000 way back when, and today it's worth $100,000, and you want to give $100,000 away, you can give that $100,000 in Tesla stock directly to the charitable, take a $100,000 deduction, and not pay tax on the $90,000 gain. So the best way to create a contribution that gives in two different ways is to give appreciated assets. All the charities know how to do it. Talk to your broker, talk to your advisor. They're well adapted to doing it. But get on the phone tomorrow because a lot of people are going to be gone in the next couple of weeks for the holidays. So you want to get on that sooner rather than later.
I was going to ask you, because that was going to be my last question, the time frame of this as we kind of move from this December into January. How quickly do people need to move if they were procrastinating in 2024? Do they still have some time early in 2025?
As far as making 24 contributions?
Yeah, just anything else in terms of people that maybe waited too long.
I think that there's always things to do. We'll come up with a list of things to do in 2025 that will help your wealth. And so I think from a time frame, it's never too late to start. But remember, the tax calendar ends December 31st. That's really the biggest thing, with one nice exception. So if you're going to contribute to your IRA account, you can actually make it up until April 15th and count it back for last year or into 2024. That's a good opportunity. If you own a small business, there's also some tax things that you can do in 2025 that actually can go back into 2024. This is where you need a good advisor, a good accountant on your team. It's always good to have a guide, always to be good team members to reduce your taxes and increase your wealth.
Yeah, that is very good advice. And of course, you mentioned it there. It's never too late to start. Of course, no matter if you procrastinate long enough, it's always good to start today and look toward the future to build that wealth. David Ragland, thank you so much for joining us here on Live Now from Fox. Happy holidays to you and yours. We always appreciate these conversations.
Great to be with you. Happy holidays.
Thank you so much. All right, let's continue on here on Live Now from Fox. Great conversation there. David Ragland talking about those tax tips, talking about what we learned with the Fed Reserve today. Although the market did dip just a little bit, he noted it being up, the Dow Jones, quite a bit over the last several months, this calendar year in 2024. All right, a live look here on Live Now from Fox at the United States Capitol there in Washington, D.C., just about 5:30 on the East Coast, there in New York City as well at the Empire State Building. I'm Andy Mack. We're back after this.